So, welcome back, Joseph. If people don't know you, you were on the Fed trading desk. Were you ever part of the plunge protection team?
That doesn't exist, Dale. Don't talk about it.
And you certainly wouldn't need one now, would we? And congratulations. Last time you were here, you were bullish in market, you were long calls, great forecasts. You ever find a difference between making a good forecast and trading it well?
Yeah, absolutely. I mean, even though, for example, right now I'm really bullish continue to be bullish throughout the year, but how you put on that exposure, it really matters, right? So,
Yeah.
like you mentioned, I've been putting a lot of calls on, and now I don't have any calls on right now because on the one hand, I think we should pause a little bit, but on the other hand, I'm really scared of missing out on further upside. So it's a tough place for me to be at right now. So it
Yeah.
ultimately comes on, I guess it's your judgment and also things like how expensive vol is and where you,
How about
uh,
emotions and psychology?
yeah, yeah.
All of
Uh,
that stuff, huh?
so I think that right now, just going on with what Blake was talking about, the dollar's been notably strengthening a lot. And that could be just some reason for the market to kind of pause a little bit. I noticed in the middle, right when we opened in Sunday overnight, we had the equity market surging, and now I
Yeah.
think it was given a lot of that back. And the
More than
dollar
half.
has been progressively strengthening. So that's I think so that's a good reason for the market to pause a bit. And right now, it looks like yields are rising up along the curve. So again, that was not the case in the overnight session. We had Treasury futures basically flat throughout the overnight session, but now it seems like we're, dollar strong, yields up, equities down. It makes sense so far.
Okay.
So
I did want to ask you, since you brought it up, this 420 area in the bond market seems to be a pivot, and we've had quite a bit of action on either side, but uh, it almost looks like that's a weekly, that we could get one more run. What are your expectations, if anything could drive it? Could it be the NFP this
so
week?
the
Wow.
NFE, I
What
think is
was
going
this? What was this about, this pop that we just had?
to
ISM?
no, let me check my data. I don't think anything happened. So
Okay.
US no, ISM is at 9:45. We haven't had any
Okay.
data. I guess people just woke up. So now,
Uh,
to be perfectly clear, when I look at the bond market, it looks like yields are trending higher, right? That seems really, really clear to me.
okay.
And I think that they should too. The way they're where we are as fiscal policy is concerned is very much that we have a significant fiscal deficit, economy continues to do well. And if you have a 5% fiscal deficit every year, which is what we're projected to have for the foreseeable future, that should push yields higher. But at the other hand of that, though, you also have the Fed that's projecting, rate cuts. And I think between these two is what's been driving yields. Now, ultimately, my expectation is that the upward pressure in yields prevails, and we have a 10-year that's closer to 5% by the end of this year.
Okay. All right. Even with your article about synchronized easing,
Yeah,
you're still looking for higher yields.
I think that's going to be part of the reason why yields go higher. So when you have synchronized easing, which is what we're having, central banks around the world going to cut short-term rates,
Right.
I think that's going to cause the economy to heat up, and that's paradoxically going to put upward pressure on longer dated yields. It'll steepen the curve by cutting short dated rates and then having the long dated rates move up a little bit. Now, 5% on the 10-year, I don't think it's high given where we are as an economy when it comes to growth and inflation. So that seems reasonable to me.
Okay. Do we have the dot plots correct now from where we were a few months ago?
No, no, I think the dot plots are right. So I think
Okay.
so. The dot
Good.
plots talk about short-term interest rates. They're
Yeah.
projecting three cuts this year. I think that's what the market is pricing in. That sounds reasonable to me. But
Okay.
I think that's not so. I think that's a policy mistake because the Fed is going off a map that's just not accurate. So they're thinking that the monetary policy is restrictive. And so, in order to avoid over tightening, they're cutting interest rates. They look at the world through the lens of real interest rates, and real interest rates right now are about 2%, and they think that's really restrictive, and they're scared of over tightening. That's why they're eager to cut. But their mistake, I think, is not understanding that, in fact, monetary policy, by all accounts, looking at financial markets, is not really restrictive. And so
No.
when you actually cut and when you're not restrictive and you're actually cutting, you become too easy. And I think that will make growth and inflation, I guess, stay elevated
Okay.
and will put upward pressure on bond yields.
Okay. Can the dollar fight this? And I'm looking for Blake and I have been talking in the 106 area, 106 and a half for dollar shorts for a couple hundred points already. What could drive a dollar peak after this bounce? Could it be the cuts that you're talking about?
So when I look across the world, so when you're talking about currencies, a lot of it has to do with interest rate differentials. What is the US doing vis-a-vis the rest of the world? And over the past, looks like dollar Dixie is about
Yeah,
104.7 now, and it's been
yeah,
trending upwards for the past couple of months. I think what's been happening is that the US, again, has been outperforming other countries, and so the market is pricing in fewer cuts in the US. And I think that that makes sense when I look at the Eurozone, when I look at Canada, when I look at the UK. The US really stands out as performing much better than the rest of the world. And that suggests that US rates are going to remain higher relative to the other countries. So it's not clear to me that the dollar should sell off.
okay.
But
There are people talking much higher numbers, the milkshake theory, etc. That um, do you think that milkshake theory by I believe it's Brent Johnson has validity?
so on the one hand, if you think about, let's say, how the US has managed fiscal situation by itself, it's would argue for currency weakness. But the US
Yeah.
has a couple of things going for it. One is that it is the reserve currency. The other is that other countries are not that different. So it's really muddy to me where the dollar will be going forward. I find it much easier to play other assets that are derived from, let's say, currency debasement, be it equities, be it real estate, be it gold. So these relative plays, one currency against another, I don't have a clear view.
Okay. Okay. It's been basically a chop fest in the dollar for a long time.
Yeah, yeah,
Um,
yeah.
while you have a great trend happening in gold, um, think there's any kind of chance for a pullback in gold? People are really getting FOMO now
Yeah, I
about
saw
buying gold.
gold just shoot up at the Sunday overnight session, and I felt like I've seen this movie before. We just
Yeah,
had this happen just not too long ago, right? And
yeah,
it got aggressively sold, and it looks like it's getting sold right now as well. We've given back a lot of the from the highs of overnight. We've given back a sizable chunk of it. But I think gold should rally significantly. Again, this goes to the argument that rather than look at, let's say, dollar against other fiat currencies, it's much better to look at fiat currencies against real assets, be it equities or be it commodities like gold. Now, I'm not really sure what's driving this trend. It makes sense to me from just a long-term, medium-term macro viewpoint, but traditionally people look at gold and they look at it in terms of, let's say, dollar strength or real interest rates and so forth. But over the past 2 weeks, the dollar has been stronger. Dixie has been trending
yeah,
higher. Real interest rates remain historically quite high at 2%.
yeah.
So it doesn't make sense from those standard macro points, but it makes sense to me just looking at where we are. In this great mismanagement of fiscal policy across the world. Now, I'll
Okay,
also note that we do hear a lot of news about, say, central banks buying gold, trying to
yeah,
diversify out of dollars. That always made sense as well. After all, when we have the Western powers not just seizing Russian, not just
right.
freezing Russian foreign reserves, but also talking about giving them to Ukraine, that's going to cause a lot of concern among countries that are not best friends with the US. But again, these medium-term factors that have been here for a while, so I'm not sure what the sudden impetus for Sunday Night Open is.
Well,
But
you
again,
did, I saw on your Twitter stream, you did have a comment on US dollar yen, which is 152 area.
yeah,
They're trying to defend basically jawboning, um, and that it's a waste of time. It's not going to work, and that the yen is headed much lower, but in this pairing, much higher,
it
over
looks it
152.
does look like the it's been kind of it's like it's bumping its head against the ceiling about 151, right? It's been there for
Yeah,
looks like it's
yeah,
almost
it's
over a week. So
yeah. Finally took the stops out over the October 22 high last week. So
So
you know,
so I'm thinking that this is it's going to be so I mean if you zoom out a bit, I like the chart that you're showing there. It looks like the dips are getting shallower and shallower and
yeah,
shallower and we're just bumping against that ceiling. I think ultimately we're going to break past that and it's just going to surge higher. Now, they're in a really difficult spot because the fundamental driver of this, of course, is the difference in interest rate policy. We got, say, 5.5 here in the US, we got 0 in Japan. Now, Japan was negative until, let's say, a month ago.
right.
Now they're at 0. That's not really going to make that big of a difference. You still have over 500 basis points in policy difference. It's the same Japan vis-a-vis Euroland or Canada or UK as well. So the fundamentals, just looking at interest rate differentials as the fundamental, is suggesting further yen depreciation. Now, they have a lot of currency that they can use to intervene. So
Yeah,
the Ministry of Finance there has about 1.1 trillion. Not all of it is in dollars. I'm guessing the most of it is. So they definitely have several $100 billion that they can spend to kind of stop this advance. But at the end of the day, you're only buying time. That interest rate differential is just too wide. And maybe if they buy time, we could have a weak NFP or something like that, market prices in mini Fed cuts, and that takes pressure off the yen. That could happen as well. Um, so
does the
that
Fed care? Does the Fed care about what happens to the yen?
I don't think so. No, that's their problem.
Okay, benign neglect. Okay. Um, all right, so that's interesting on the yen. I wanted to also touch upon something you talk about in your stream, how these inflationary times changed the culture. First of all, historically in France, we know how it changed. It changed it into a guillotine culture, right? That was,
At the yeah, at the end of the so in revolutionary France, the currency was losing tremendous amounts of value. The government was very mad. They did price controls and so forth. And of course, they tried to decree the value, making sure that you had to trade uh, carved between what the currency is worth and gold and so forth, and they would back that up with a guillotine. So some people, I think there was a quote, it was a guillotine-backed currency. If you did not do what the government, wanted you to do, they
yeah,
would kill you, and they killed many people. But at the end
yeah,
of the day, it was not enough. But I think one thing to note about countries that have high inflation, and not just in France, you see this in not just in revolutionary France, but you see this throughout history, is at the end of the day, when you head into inflationary times, assets appreciate significantly, and the people don't actually do well economically. And so what
right.
happens is that the people who benefit the most are those who speculate. And everyone begins to realize that in order to make it, you can't be working on your hard at your job. That doesn't get you anywhere. You can't save money. That's a waste of time. You got to speculate. And that's a kind of a fundamental change in culture that you see in many countries actually that have high inflation throughout history. And maybe we see a little bit of that today, right? We got a lot of people who are speculating on, crypto,
Yeah,
memes, tech stocks, and so forth. And uh, it, it's been working out much better for them than people who would just, work a regular job, have their wages erode by inflation, never be able to afford a house, and so
yeah.
forth. So again, things are fine here so far. They're heading towards a wrong direction, and maybe they'll become worse. But we just see a little bit of that here in the U.S. today.
Okay, and it was like that in Japan when in 1989 when the
1980s,
Nikkei,
yeah, yeah.
yeah,
There's a boom there. So Sid Perdue cites a very interesting story where one of the central bankers of the time was giving an interview about the time in the 1980s Japan, and he was like, "Gosh, everyone just wanted to make money by speculating. It had a corrosive impact on the national moral character. People just became, I don't know, basically became like degens, and that was not good for the country. And it ultimately ended in a spectacular collapse that put Japan in hard economic times for several years.
Okay, is that what's happening in China now? Because the citizenry invested heavily in real estate and their stock market, which both have been in severe bear markets, and you're getting the opposite effect of inflationary times. What happens to cultures? And we experienced it here in the US during deflationary times.
So in China, it's a little bit different. So people don't really buy stocks. And the Chinese culturally really like real estate. And as you know, Dale, there was a tremendous speculation in real estate over there. I mean, Chinese people don't just buy real estate at home, they go around the world. Vancouver, for example, is very famous
Yeah,
for having a lot of, I think, Chinese there and just, make the real estate market go to the moon.
yeah.
And as you know, there's been a deflationary wave there. My sense, though, is that, that they haven't. So we know the property companies aren't doing well, but the typical person typically doesn't seem to have had big losses on their real estate prices at the moment.
Oh,
And the
okay.
government is doing everything they can to just keep things together. I don't really worry about that because in China, things are different than they are in the West. The government controls basically everything. So if they want, they can just force the commercial banks, which they own, to continue to lend to the property companies, to continue to lend to people and roll their loans over and over for forever, really. So I think any kind of collapse is just not in the cards. But I think it will have an impact on their culture, whereas maybe they don't view real estate as secure as it used to be. And then if that's the case, they'll find new assets to speculate in. Looks like the government is trying to stir up interest in the stock market. We'll see how that goes.
Okay. And I did want to talk about if your opinion of, because you're talking about mismanagement by the Fed, and I know you were a Jay Powell, um, and felt he was a credible guy. To me, he's like Jekyll and Hyde when it comes to his press conferences, and you never know which Jay Powell is going to show up. Has your view of him and how he's handling the Fed changed at all over the course of the last couple of years?
So I like Jay Powell. I think I think he's someone that with integrity and I think he's doing the best job that he can. But I think he's in a difficult situation right now because him, like any other person, uh, operates under political constraints.
Okay,
So, let's look at the board of governors that Fed governors he has to work with, right? Like President Biden appointed a whole bunch of people, and those guys, they're really dovish. So he has to be able to work within that constraint. And of course, um, so we
yeah,
are in an election year. So I think there's a lot of things that, maybe we're not aware of, but actually do constrain what he can do. And of course, he works with staff that are, basically all in on these economic models that tell him that uh, financial conditions are restrictive, inflation is going to come down, everything's going to be okay. Those guys are totally wrong when they're talking about transitory. But I get
right.
the sense that Jay Powell kind of has to listen to them or at least give some weight to what they're saying. So I think he seems dovish now, and I think that reflects some of the constraints that he's under.
Because he knows history. And in the 70s, you could win a battle with inflation for a while, but you didn't win the war. It took three tightening cycles and a draconian one to really get a handle on it. So um,
Well, Arthur
he's not
Burns.
Paul Volcker.
No, he's not Paul Volcker. He's Arthur Burns. But let's be fair to Arthur Burns now.
Okay,
He
all right,
he wrote a speech called The English Central Banking. Arthur Burns did, and back then Arthur Burns was actually a very respected economist. He was someone who was not considered a dove, but in his speech he would tell you that he could have got inflation under control anytime he wanted. Could have just raised interest rates a lot and then caused a great recession and got inflation under control. But then he said that he just couldn't do it because he didn't feel like he had the political support. He said everyone at that time, from Congress to the people in the Fed, they were really pro-worker. They were really trying to they really valued employment over inflation. And so he just didn't have the political support to do what needed to be done. And so, in a sense, he was a man of his time. And it was only after many years when the public really got sick of high inflation that they were willing to tolerate the super tight monetary policy that Volcker brought to get inflation under control. So again, these guys, they are kind of, in a sense, they're very important, but Fed chairs are ultimately a cog in a much bigger socio-political machine. And so they have to work around those constraints.
Yeah. So the independent Fed is really just not really true, that they are political
But
animals. And a lot of people are going to accuse Paul of being political by cutting, if he starts in June, ahead of the election, that he fears a Trump presidency and wants to help Biden if he can.
So you can look at public donation data, opensecrets.org. Basically, everyone who works at the Fed donates to Biden. They don't like Trump. Okay, that's clear. But I don't think that a rate cut in June would necessarily be politically motivated. I think from their perspective, and they've laid it out really clearly, they think that rates are too tight given where inflation is. And so I think it's reasonable for them to cut rates.
Even though they know financial conditions aren't tight.
Well,
And
so
if
okay.
we know it, they know it.
Right. So Governor Waller, to be clear, Governor Waller, top guy, Fed governor, Trump appointee, was
Okay.
asked this question, I think, oh, actually on Friday. And he's like, he thinks financial conditions are tight. Why? Because he says interest rates are tight. Look at mortgage rates, look at auto loans. He cares about these things rather than the financial conditions index. And he'll tell you why. He'll says that, well, financial conditions index, a lot of that is equities, and that's just the Mag 7, right?
Yeah.
Can't just let this Mag 7 set monetary policy. And credit spreads tight. Well, maybe that's just the rise in private credit competing with all these other lenders and compressing spreads. That doesn't necessarily mean monetary policy is tight. Now, I think he honestly believes that. So now this
Okay.
guy, I don't think I don't think he's a Biden guy. So he honestly
Okay.
believes that.
Okay. Yeah. You used to believe that we wanted to escalate in Ukraine, and that's changed with support dropping and for the war here in the U.S. And I'm wondering if you think that this political season can make the Fed look powerless if we end up in a constitutional crisis. And do you think that might happen?
Oh, I don't know if we'll end up in a constitutional crisis. We are
Okay.
definitely polarized, and I hope that the election goes smoothly and that people are able to accept whatever the outcome is. Um, but what I've seen over the past few years is that, it's kind of a full court press when it comes to politics. It's no holds barred. I remember in
Yeah.
2020, we had the government strongly, heavy-handedly influencing the press, even platforms like Twitter, on whether or not to show stories that are flattering or unflattering to a particular candidate. So uh, I think they'll do anything to win, and
Yeah.
that's probably not going to be good for the public. And I don't know what will happen.
To the markets.
The markets,
Will they see through that? They see through everything.
well, I think whoever wins, though, is going to be market positive because everyone wants to spend more
Okay.
money, and spending more money is very good for the market.
It's just who they want to spend it on.
Exactly. Now, Trump
All
would like
right.
to have tax cuts. Biden would like to have maybe higher taxes on some and spend more on green stuff. But
Okay.
I think Trump would be better for the markets because I think tax cuts are more stimulative to the economy than just spending money on green energy and stuff like that, or forgiving student loans. But they'll both be good for the market.
Okay. And there is talk that we might start with the CBDC this winter. Do
Nah,
you see
nah.
that coming? No?
As long as Chair Powell is chair, I don't see that coming. Now, we're really lucky in that Chair Powell is Fed chair and not, say, Lil Brainerd. If we had Lil Brainerd as Fed chair, we would be on CBDCs probably by winter. So globally, if you look across the world, you have the Eurozone, the ECB, all in on CBDCs. They're studying it. They're going to roll it out. That's their thing. Um, Probably in Canada as well. In Japan, they actually just looked at this and decided no. Apparently, because their population they have an old population, and the older people don't want to learn how to use a CBDC, and they're comfortable with cash, and so they decided that yeah, well, we can't do this, or people wouldn't know how to use it. But here,
Okay.
though, now Chair
Good
Powell has
place
been.
to move to.
It's a great place, actually. You just have to
Yeah.
speak the language. So Chair Powell has been really clear that he's not doing a CBDC unless Congress tells him to. So he's just kicking the ball to Congress to decide. And that's great because, um, Congress probably is not going to be able to decide that because it's a polarizing issue.
It sure
And
is.
I don't think we in the foreseeable future we'll get to a point where there will be like a majority that would push for this. So I think the US is safe from CBDCs for the next few years. An interesting idea I've been thinking is that let's say that CBDCs go to other jurisdictions like the Eurozone and so forth. Does that mean there's a lot of people who, want to hide their money in dollars? Because
Oh,
let's be frank now, some
yeah.
of that money they don't really want to have on the grid, So.
Yeah. Yeah. Interesting thought. And the thoughts just keep rolling in. And if you liked what you heard, and I always enjoy talking to Joseph, subscribe to his stuff so you could read these articles instead of just getting a free email that you get you know, just a taste. But if you want the whole thing, plus his courses, if you want to learn about central banks, what who better to teach than somebody who worked and lived and breathed it? So, Joseph, I want to thank you again. You've been coming on for years.
I
Now
have,
it's
yes.
been a while, and I want to thank you for your giving spirit to come here and educate and edify the faith community all
Well,
this time. We
well,
appreciate you.
oh, Coach, give me your top trade right now.
Top trade is still long the dollar towards 106.60. Buy the pullback in gold to 2100. Buy the pullback in silver at about 2320.
I like all of that except silver. I don't know what about silver.
And
I've
buy
lost too
the
much money on
gold
silver.
miner. Buy the
Huh?
gold miners, the
Ah,
miners.
I've
I
lost too
know.
much money on
See,
those.
everyone says that. Everyone says that because they've lost so much money. It's a terrible business, but I'm looking for a powerful move in the miners over the next few years. So
All right.
that's it.
Thanks, Coach.
You're welcome,
Thanks,
buddy.
everyone. Talk to you guys
All
later.
right. Joseph Yang at Fed Guy on X, and go to his website and check him out. It's a great teacher. Adios. Hope everyone enjoyed it. Everyone enjoy it? Let me check. Yeah, okay, Alexander, all you guys, Joe. Yeah, check them out. And you could join the team in 14 minutes for the morning edge. So you have to sign up right now to get into the morning edge. It's going to be a great week to trade. All right. So don't just count your pips, count your blessings. Adios, everyone. I want to thank everyone for their good thoughts and migraine cures that you sent me over the last few months, rooting for me to get better. I'm glad to report I haven't had one of those headaches in about 4 days now. So thank you for the good thoughts and prayers, etc. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.